The United States is currently facing a fiscal crossroads that many experts believe has moved beyond the point of traditional repair. With the national debt surging toward $40 trillion, a radical new genius strategy has emerged that seeks to settle the score not through austerity or tax hikes, but through a high-stakes economic explosion. This plan abandons the cautious diplomacy of past administrations in favor of a dual-track approach: massive military spending and a calculated, catastrophic devaluation of the dollar. Under this proposed roadmap, the American defense budget is projected to surpass $1 trillion by the year 2026, with a further 50% increase planned for the following year. The underlying logic suggests that a supreme military force is the only way to anchor the dollar's status as the global reserve currency, effectively forcing the international community to accept American economic terms. However, the most jarring aspect of this strategy is the reset button. The proposal suggests that if the debt becomes unmanageable, the United States could intentionally trigger a 300% devaluation of its currency. While such a move would technically wipe the debt clean in real terms, the global consequences would be seismic. A devaluation of this magnitude would likely shatter international trust, ending the dollar's era as the world's primary reserve and sending shockwaves through global markets. We are already seeing the tremors of this shift. Major holders of American debt, such as China, have been aggressively offloading their portfolios. Recent data indicates that Chinese holdings have plummeted to below $700 billion, with projections suggesting they could drop to less than half that amount within a few years. Even staunch allies and pension funds in Europe are beginning to distance themselves from American Treasury bonds. To survive the fallout of a collapsed dollar, the strategy envisions a transition toward a Bretton Woods III system. This new order would pivot away from fiat paper and toward a resource-based economy backed by oil, minerals, and energy. By exerting influence over energy-rich nations like Canada, Venezuela, and Iran, the goal is to leverage physical commodities to maintain global dominance. Yet, this remains a massive gamble. Should the global market retaliate or unify against these aggressive maneuvers, the United States could find itself in a permanent economic winter rather than a rebirth. The world now watches to see if this suicidal rescue will save the American economy or trigger the greatest financial disaster in modern history.